Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Arch Resources Inc., ticker symbol ARCH, Arch. So Arch is a subscriber request, and it's an energy business that has done very well so far over the last year. Currently, Arch Resources is trading for $137.65 per share. Over the past year, their stock price is up nearly 50%. Over 3 years, they're up at a rate of 20.5% compounded annually. And going back 6 years to when the company was publicly listed, Arch has returned 14% compounded annually. From its lows in spring of 2020, the business is up nearly 6 times. In addition to this, Arch is also paying out a small dividend. They have about a 0.7% dividend yield, so coming in under 1% there. But that would add to these returns additionally. So Arch Resources is about $50 below their 52-week high, but they're almost $60 above their 52-week low. At the same time, this business has a ton of short interest around it. Nearly 17.5% of their shares outstanding are currently sold short, and they have a $2.5 billion market cap. So for additional background about the company, Arch Resources Inc. is a producer of metallurgical and coking coal. The company sells its coal to power plants, steel mills, and industrial facilities. Its operating segments include Powder River Basin, PRB, metallurgical, MET, and other thermal and corporate. The company generates maximum revenue from the Powder River Basin segment. Its PRB segment contains the company's primary thermal operations in Wyoming. The MET segment contains the company's metallurgical operations in West Virginia. And the other thermal segment contains the company's supplementary thermal operations in Colorado and Illinois. Interestingly enough, geographically, Arch Resources derives a majority of its revenues from Europe. The company was formerly known as Arch Coal Inc. and changed its name to Arch Resources in May of 2020. Arch Resources Inc. was incorporated in 1969 and is headquartered in St. Louis, Missouri. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Arch Resources, based off of their business fundamentals. This analysis will continue to evolve, improve, and get better over time. It's still a work in progress. Without being an expert in energy or coal mining businesses, it's an opportunity to learn in public. So with that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average returns on capital over the last 5 years to be above 14%. So over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. Additionally, the average publicly listed business is going to earn about a 7% return on capital. So by looking for average returns that are 14% or greater here, we could potentially build in some margin of safety for ourselves based off the quality of the business being at least twice as good as average. For Arch Resources, they earned very high returns on capital in good years, and they had good years for 4 out of these 5 years. However, they had pretty negative returns on capital in 2020. The COVID-19 pandemic hit their business very hard. Personally, I don't have the background to understand why this would necessarily be the case, but that would be something that you'd want to dig into to learn exactly what happened to the company, whether they were affected by commodity pricing in 2020, or if COVID really did impede their operations in some other way to get a deeper sense of the business. However, since the COVID-19 pandemic lockdowns ended, the company has been on a tear. Last year, they produced returns on capital of nearly 31.5%, and so far over their last 12 months, they produced 77% returns on capital. So that is staggering. That's 11 times better than average. And averaged out over the last 5 years, Arch is producing just under 15% returns on capital. So above the 14% metric we're looking for, meaning that this is a check to start off on metric number 1. Next up, for metric number 2, we're taking a high-level overview of the cash coming into the business. We want their revenues, net incomes, and free cash flows to have grown over the last 5 years. This metric is all or nothing in nature. Either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. We're going to be including their last 12 months numbers in this as well. So over this time, even though from fiscal 2017 to 2021, it looks like their revenues declined, their revenues are actually up over this period, including their last 12 months. Their earnings are also up. They were up from 2017 to 2021, but from 2017 till right now, their earnings are up by more than 4 times. And a similar situation with their cash flows. Even though they had negative cash flows in 2020 and 2021, they actually had over $600 million of free cash flow over their last 12 months. So all 3 of these are going to be up, and this is going to be a check on metric number 2 as well. Next up, for metric number 3, here we're taking the perspective of an individual shareholder in the business by looking at Arch Resources on a per share basis. We want to see their earnings per share growth over the last 5 years, and this is exactly what we're seeing. From 2017 to 2021, they nearly doubled their earnings per share, and over their last 12 months, they're actually earning about $50 per share. So very high growth here. Additionally, their earnings per share are actually growing faster than what we just learned, and this is because the company has been decreasing their shares outstanding. Over the last 5 years, they've repurchased about 17% of their shares. This is important because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. So when a company buys back stock, by decreasing the number of shares that they have outstanding, they're actually increasing your ownership percentage in the company, which is going to increase the percentage of the business's profits that you're entitled to. So you're not going to have to lay out any additional money here. And when a company buys back shares, it's as if they're making an acquisition of themselves. So we ideally want businesses that are buying back shares when the company is undervalued. So because of their earnings growth and the share buybacks, their earnings per share are up quite significantly over this time. This is yet another check on metric number 3. Metric number 4 is going to be very similar. Here we're looking for free cash flow per share growth over the last 5 years. So again, as mentioned, Arch Resources free cash flows were negative in 2020 and 2021. However, they've increased to being quite positive over their last 12 months. And in fact, from 2017 until now, they've just about tripled their free cash flows per share. Over their last 12 months, Arch Resources has brought in $40 in free cash flow for each share that they've had outstanding. That's phenomenal growth here, coupling their free cash flow growth with their buybacks. And this is yet another check on metric number 4. So far through our first 4 metrics, we are perfect, 4 for 4. Another thing you'd want to make note of here is that ideally over extended periods of time, meaning with 10 years or more of data, you'd want a company's earnings and their cash flows to be roughly the same. And even though 5 years is shorter than this seems like it's close to being the case for Arch Resources. 2021 was a little bit different story, but these two metrics are trading back in tandem over their last 12 months or so as well. Next up, for metric number 5, here we're evaluating how the business is utilizing leverage. So we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that Arch Resources has produced over the last 5 years. So even though they had $143 million of net debt at the end of 2021, currently they're actually in a net cash position. So they have $80 million of cash left over after paying off all of their debts. And over this time, when you add up all of these cash flows, they brought in nearly $580 million of free cash flow. So they're sitting on $80 million in cash, and they're steadily bringing in cash through their cash flows. Again, their last 12 months of free cash flow are pretty significantly positive, bringing in over $622 million in free cash flow. So this is a big check here on metric number 5. The business has a very healthy balance sheet and is very cash flow positive. So through our first 5 metrics, we are still perfect, 5 for 5, no X's so far. Then our 6th and final metric, the big metric of them all, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will give us a slight risk premium to the risk-free rate of the 10-year treasury, and will give us another reason to potentially be interested in the company. We're using their total enterprise value here because it's going to be a more accurate picture of their economic reality than their market cap is alone, because it's going to take into account both their market cap and their net debt position, giving us a more similar picture for Arch Resources as if the business were a private company. So currently they have about a $2.5 billion total enterprise value, and we learned that over the past 5 years, they produced about $580 million of free cash flow. So in an average year over this time, they're producing about $116 million of free cash flow. And when we divide their $116 million of average free cash flow by their $2.5 billion total enterprise value, that is going to give us an average free cash flow to enterprise value yield of 4.6%. So that is very close to where we wanted it to be at 5%, just a tiny bit under here. It is slightly better than the 4% that the Treasury is at right now. But unfortunately, this is going to be our only X here on metric number 6. A big potential bright spot for the business, though, is that over their last 12 months, they brought in $622 million in free cash flow. So if we wanted to get a current free cash flow to enterprise value yield, and we divided their $622 million of their last 12 months of free cash flows by their $2.5 billion total enterprise value, that gives us a current free cash flow to enterprise value yield of nearly 25%. So that is massive. That means the company is bringing in nearly a quarter of their total enterprise value in free cash flows annually if they're able to sustain this going forward, and you'd be able to understand if that's potentially going to be the case and learning about the business in more depth. We'll talk about some resources that you can use in a little bit to help get a deeper understanding of the business. But so between their average free cash flows just being slightly below where we wanted them to be, and then having them have a massive current free cash flow yield, it seems like the economic reality for the company would be somewhere in between, and that even though it's an X here, this business would still be something you would want to consider, especially given their very high returns on capital recently. Finally, here we're looking at their dividend profile. So Arch Resources currently has a dividend yield that's a little bit below 1%, coming in at 0.7%. So they're not returning a lot of cash to shareholders via dividends. However, we'd still want to be seeing that their dividends are well supported by their cash flows. This was the case prior to the COVID-19 pandemic. However, since then, in 2020 and 2021, they did not support their dividend with cash flows, but that has changed again. They've been easily able to support their dividend over their last 12 months. And so understanding what they're doing with their leftover cash flows in terms of capital allocation would be, again, another big key point that you would want to learn more about to learn about Arch Resources in more depth. So in summary, Arch Resources checks the box on 5 out of 6 metrics. On average, they're earning high returns on capital, coming in at nearly 15% in a given year. Over their last 12 months, they're earning very high returns on capital at 77%. Then over their last 5 years, they've also grown their revenues, their earnings, and their free cash flows by quite a bit. They've also repurchased 17% of their shares outstanding, so their per share metrics are up as well. Then after paying off all of their debt, Arch Resources is sitting on $80 million worth of cash, and based on their abilities to produce free cash flows, even though their average free cash flow to enterprise value yield is slightly above where the treasury rate is at currently, it's just below the 5% mark we're looking for an adequate risk premium here. However, when we're evaluating their current free cash flow to enterprise value yield, the business is doing extremely well. They have a nearly 25% current free cash flow to enterprise value yield, and so that would be one of the higher yields in the market overall, and likely give a reason that you would seriously want to consider this business. Additionally, although they struggled to support their dividends fully with their cash flows in the past 2 fiscal years, that situation has changed pretty dramatically over their last 12 months, as they've been bringing in a ton of free cash flow. So keep in mind that this type of analysis is not financial advice. It is not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with the properly licensed financial advisors. This analysis instead serves as a holistic and beginning understanding of Arch Resources to help you determine whether it's worth your time and energy to dig in and learn more about the company in more depth. If you're interested in learning more about Arch Resources, I'd recommend starting with their 10Ks. You can get a history of the business and their operating results. Management will also lay out some of the potential risks that the company faces, and you can get an understanding of both the character and competence of management as you understand their business strategy going forward and how they plan to allocate capital. As a value investor, you're ultimately wanting to do this deeper research as if you're going to own 100% of the company, and you can truly understand the underlying essence of the business and come to a knowledge of what's important and what's not important for the company moving forward. When you're finished reading through their 10Ks, I'd also recommend reading through their 10Qs, as well as reading through some of their recent quarterly earnings call transcripts to get a more nuanced perspective on management and on the business on a quarter-to-quarter basis. So through this deeper research, you'll ultimately be able to learn about both the qualitative and the quantitative aspects of Arch Resources and be able to determine for yourself roughly an appropriate intrinsic value for the business. So with that said, that's it for today's fundamental stock analysis of Arch Resources Inc., ticker symbol ARCH, Arch. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Arch Resources with me, and have a great day.